Welcome to the Economy Magazine. I'm Binyamin Tjong-Alvares with the top reports from the global economy. And on today's show, as the US and Cuba assemble at America's summit, divisions remain, and Modi strikes success on European tour. First, the headlines. China's exports dropped 15% in March from a year earlier, raising the likelihood of disappointing first-quarter growth. The weak data stoked expectations Beijing will continue to ease domestic conditions with a further cut in interest rates. The Chinese stock market rallied to 7-year highs on Monday, fueled by speculative buying on hopes of fresh stimulus from Beijing. But as Beijing already cut borrowing costs twice since November, it could spark capital flight as the dollar strengthens on expectations of higher rates in the U.S. Oil prices rose slightly on Monday following a strong end to last week as financial traders expect higher prices amid a slowdown in U.S. drilling. Front-month Brent crude futures rose to $59.30 a barrel in morning trade, while U.S. crude rose to $52.83 a barrel. But Morgan Stanley in a report said U.S. oil production costs are falling, allowing for a lower cost structure for oil prices. And Barclays expects an expansion of oil market surplus in the second quarter, with Brent expected to average $47 a barrel and WTI at $39 a barrel. German Chancellor Angela Merkel and Indian Prime Minister Narendra Modi on Sunday opened the Hannover Messe, the world's biggest technology fair. The fair, officially hosted by partner country India, is based around 10 parallel trade fairs, all arranged around core themes. Germany is India's biggest European trading partner, but Merkel said the trade between Germany and India can still be improved. Modi vowed to remove unnecessary regulations and procedures to simplify the process of foreign investment in India. Prior to the fair, Modi ordered 36 Rafale fighter jets in a multi-billion-euro agreement in France. More on Modi's Rainbow Tour following the headlines.
We are creating a stable economic environment that inspires confidence at home and abroad. We are pursuing strong official discipline, a fiscal discipline to do that.
The World Bank cut its 2015 growth forecasts for developing East Asia and China, warning of significant risks from global uncertainties. The bank expects the developing East Asia-Pacific region, including China, to grow 6.7% in 2015 and 2016, down from 6.9% growth in 2014. Monetary policy divergence across the advanced economies is a wild card as the U.S. dollar firms on expectations of a U.S. rate hike. Any downturn in Japan and the euro area would also dent the region's exports, the DC-based lender said. One of the highlights of the 7th Americas Summit was the reunion of the US and Cuba as the little island nation was allowed to participate for the first time. But while an ideological split remains across the continent, time will tell how American trade partners will fare in the future. i24 News journalist Daniel Roth brings us the report.
The 7th Summit of the Americas brought the Western Hemisphere's political leaders together in Panama City over the weekend. This was the first year that Cuba was allowed to attend, and a historic meeting between U.S. President Barack Obama and Cuban President Raul Castro took center stage. Still, even as relations thaw, economic and ideological divides are present. U.S. economics have swung rightward in recent decades, and countries including Venezuela, Cuba, and Bolivia maintain some leftist models, an issue President Obama touched on.
I think it used to be viewed as either you have a government status economic model or you have a complete free market, and everything was very ideological sometimes in this region in discussing how economic development went forward.
A number of one-on-ones took place at the summit, including between President Obama and Brazilian President Dilma Rousseff, who had canceled a visit to the U.S. in late 2013 after finding out that the U.S. had spied on her communications. Brazil's $2.2 trillion economy is important to the U.S., as it is the biggest in Latin America. Rousseff, who also met with Facebook's Mark Zuckerberg, has been facing sliding popularity as her country's economy struggles.
I believe that regional integration of our economies works as a factor that expands our borders, that expands our opportunities, and that expands our economies. And to this, Brazil has dedicated itself in the recent years to heavily investing in the integration of infrastructure.
Outside the summit, 3,000 people from across the Americas gathered for an alternative people's summit in order to bring focus to social movements from labor to environmentalism and beyond on local and international fronts.
And now for a look at the big calendar events for the week ahead and where we can expect volatility to come from in the markets with JKonFX founder Joel Kruger. Mr. Kruger, thanks for joining us.
Hi, Binyamin. Good to be here.
So what are the big calendar events coming up this week?
So this week is stacked. We have a lot of volatility potentially that we're going to see this week. We've already seen it start off today, earlier with the China trade data, which was a disaster. We're going to see China GDP and industrial production later this week. But on the developed front, we're going to be focusing on U.S. retail sales, U.S. inflation data later in the week. We have the European Central Bank decision. We have a Canada Central Bank decision, and we have UK CPI, Aussie unemployment. So lots going on.
A lot of variables that can really influence the way we see the world and the way that the markets react, presumably. But let's go back to one of the main ones that actually have had a tremendous impact on the world. Let's go to the Federal Reserve meetings, basically, the minutes that we saw from the last meeting. How do you think this will affect the market?
So it's already been affecting the market. It's been a flip-flopping exercise with reading the Fed, and we saw that the last Fed meeting, it was dovish, and then the minutes came out, and a lot of the Fed officials were talking about a rate hike again in June. And people pushed back rate hike expectations, and now they've come back. They've accelerated forward again. So it's affected the market. We've seen the dollar appreciate on the expectation that rates are going to go higher.
It's this constant back and forth. It's this constant play, essentially, with words, and do we say patience? Do we take out patience?
Right. Right. So the Fed has to tread carefully. They need to tread carefully. It's a sort of fine-tuning exercise. They don't want to get too hawkish and signal to the markets they're going to raise rates too aggressively. At the same time, they need to start moving in that direction. So there's a lot of back and forth and a lot of parsing.
Now, how does this affect gold and oil, or rather, how do gold and oil affect the market in that sense?
Right. So we've seen both gold and oil and commodities in general depressed over the past several months. But I believe that both markets, I think, are going to be trading higher over the medium term. Gold, when you have a global market where currencies are in a race to see who has the weakest currency, gold, I think, becomes very attractive, and I think we'll see gold higher. Oil, for me, is very compelling. I know there are fundamental reasons why we're starting to see it move higher, but very compelling technically. I think we could be seeing a double bottom with a break above the 40. We could basically see a move up towards the $70 mark, I think. Right.
And taking this closer to home, when you talk about the Israeli shekel, how is the Israeli shekel really affected by all of these movements in the world and by the decisions that are made by the Federal Reserve or?
So like any other currency and any other economy right now, everything's driven off of monetary policy divergence. So the shekel is not immune to that, and the shekel should depreciate as the dollar strengthens. Right. But if we look at the Israeli economy, we're seeing intense deflation, which is pressuring the central bank to move towards potentially negative interest rates. And I think that's an added factor that's going to continue to maybe even see underperformance in the shekel versus currencies like the euro and the pound going forward as well.
Okay, what is your favorite trade, just to close up here?
So my favorite trade, if you're willing to sit on it and sort of hold back right now, is buying the Australian dollar relative to the New Zealand dollar right now. It's been at record lows, the Australian dollar against the New Zealand dollar, and I think that we're going to start to see some outperformance in the Australian dollar going forward, and I think that's a good one for people to take.
Okay, well, JKonFX Joel Kruger, thanks for joining us for the markets.
Good to be here.
Thank you. India's Prime Minister Narendra Modi has been very busy pushing India as an attractive investment destination since his election a year ago. And his current trip to Europe is shaping up to be especially beneficial for India's trade relations there.
Narendra Modi, Prime Minister of India, made his first official visit to Paris. During Modi's stay, an unprecedented agreement was struck between the two countries, the sale of 36 Rafale combat aircrafts. This is the second contract the French manufacturer Dassault has won since the start of this year.
Defense equipment.
France has always considered our demands, including our critiques, And that's why I asked once again for the president to give us 36 Rafale key in hand with future terms. The conditions must now be negotiated, and our services will discuss these issues in depth in order to advance the negotiations.
The original contract was brought to the table 3 years ago. The talks began in 2012 and included the sale of 126 aircrafts, with 108 of them being directly assembled in India. All of this for around 12 billion euros. However, the implementation of this agreement proved to be more complex than expected. There are high manufacturing costs, and Dassault has not mastered all the Indian components. The 36 Rafales will therefore be built in France, a strain to the new industrial policy which promotes a Make in India campaign launched by Narendra Modi last fall. It is no reason for despair because Indian Prime Minister was able to secure many other agreements, including in the fields of transportation, energy, and aerospace.
Mr. Prime Minister, I'm very sensitive to the announcements you've been able to make these afternoons here in Paris in energy, space, sustainable development and defense, including your willingness to buy 36 Rafales as soon as possible and to develop the contract that was signed. The Defense Minister will visit as soon as possible.
Before leaving, Narendra Modi has offered a stopover in Toulouse to visit the National Center for Space Studies and the sites of European giant Airbus. The manufacturer has 70% market share in India, a growing market where France intends to play the leading roles.
And from India's Rafale jet fighters, we move now to our offbeat corner with I-24 News journalist Daniel Roth in Media Watch. Daniel Roth.
How's it going?
Good. How you doing?
I'm doing okay.
We're talking about the future president of the United States.
Yes, we're talking about, everyone knows it, the case is closed.
It's closed.
Unless you've been living under a rock, you know that Hillary Clinton has announced her candidacy officially.
She's been president for many years already, right?
Yeah, she's been president on and off for about 15, 20 years. Now she wants to do it for 4 to 8 years straight. So
yes. Honestly, though, I mean, it's exciting. The first potential female president.
Yes, it's very exciting. Having the first female president would be a very, very big deal.
However,
it's no small deal. However, there's a big gap, especially economically, between what she says and what she does. The history, we can't predict the future, as we were just doing, but the history speaks for itself. She was on the board of Walmart from 86 to 92 as they began to attack labor unions aggressively. In the 1990s, when her husband was president, that administration basically tore apart Social Security, deregulated Wall Street in big ways, not as much as President Bush Jr., but in very, very big ways. And last but not least, in previous campaigns, her biggest contributors, 5 of 10, are major Wall Street firms like Goldman Sachs, Morgan Stanley, the now gone Lehman Brothers. Her contributors and her history all point to her having not what you would call the image of a people's economic policy.
So should she be maybe running for the Republicans? Is that what you're saying?
Well, so this is one of the big questions, is across the board, people don't see a difference on economic policy between Republicans and Democrats, and there's no question about that.
Because I was going to say that. I mean, essentially, they have to, these campaigns cost tremendous amounts of money. In my personal opinion, way too much money.
Yes.
Okay.
I don't think that's just your opinion.
Where's the money going to come from? I mean, if not from these huge, gigantic banks, right? And is this maybe one of the reasons why we don't see as much of a difference between the Democratic and the Republican candidate at the end of the day? I mean, essentially, they're both running.
Yeah, that's.
On money.
You're hitting the nail on the head. In America, especially post Citizens United with super PACs, the money, the pit is bottomless. Money coming into these campaigns is endless, and essentially candidates can and try to raise as much as they can. This isn't the case in many other countries. In Europe, in Israel, in Canada, there are much more significant limits on campaign finances.
Although we still also waste a lot of money here
too. Of course, there's enormous mass amount, but
doesn't
it's
touch America. But America is the greatest. No, I mean America goes beyond.
America goes beyond how any near competitor in spending. And yes, exactly. That's the nail that's been hit on the head. Is this money is coming from private entities that are looking out for their needs. So when Wall Street is footing the bill for campaigns across the board, you can bet that all of those candidates are going to be getting into office and protecting Wall Street's interests. And that's what we have seen, at least since the early 1980s, in everyone who's gotten into office. You see very little difference at the end of the day between Reagan and Clinton. For example, difference in rhetoric for sure, but as Democrats speak a slightly nicer, more populist game, they're tearing apart the same regulations.
Okay, well, Daniel Roth, I guess we'll see how things play out in the end.
Yeah, absolutely.
Thanks for joining us. That is the end of our Economy Magazine, your daily source for economic and financial reports at I24 News. I'm Binyamin Tjong-Alvares. Thanks for joining us, and join us again tomorrow for more on the economy.